Testing 1, 2, 3. All right. Good morning. Good morning. We are here once again, ready to watch the ponies run. I have a good presentation for you today. Good class prepared. So I think we're going to have a lot of fun. So stick around for all the fun things we're going to do today in class. So what's the first thing on the agenda? Well, the first thing on the agenda is to watch the opening bell, because that's the part of the day we like to do. We like to come down here, and up in the upper left-hand corner, we have the S&P 500. That's a 15-minute chart. You can see the market starting to rally. It took off around right out of the opening gate there in the pre-market session for the New York market. This is the Chicago exchange, so there's really no pre-market session, but we do watch what's happening in the Chicago or in the New York markets from the Chicago point of view. So we can trade this in Chicago. There's no problem with that, but this is when the New Yorkers start to trade. So you can see the market started to take off here. Oh, actually, this is a little bit earlier. This is middle of the night stuff. Their pre-market session started right here. So here's the New York's pre-market session, and it's just come straight out of the gate on a hard rally. So that's nice to see. And we got a nice little ABC in there. You can see this is on the 15-minute chart on the S&P 500. It's gone up. We had our little counter trend, and now we got a little ABC reflection. So that's a nice, perfect little setup right there, ABC. Right out of the gate here, it's right hitting 100% on the Fibonacci projection level. That's a 15-minute chart, though. Over here, we've got the 1-minute chart, and this is the Dow. Now, yesterday, we had the bracket of yesterday's opening bell. So here was the bracket of yesterday's opening bell. Isn't that interesting how it's didn't move a penny. It's right back to where it was yesterday. So those are our opening brackets from yesterday, and we're right back into the middle of it. So the Russell down here in the left-hand corner, that's a 1-minute chart. And you can see it's kind of taken off right here at 6:29, 6:30 a.m. Market went crazy. And it's just been going straight up ever since. And then we've got this nice move right in here on the NASDAQ, which not quite as nice a move as the Russell, but nonetheless, it's kind of on the rally. So we did have this little craziness right here at 6:30, and the market's going straight up. So the market's feeling positive about what they think is going to happen today. Well, land, what is going to happen today? Well, today, let's go look at the news and find out what's going to happen today. Let's pull up the news, and here's the news. And you can see right here we have 6:15 a.m. We had ADP employment changes. That's probably kind of what caused the market to jump a little bit. But we've got at 8 a.m. we got Fed Chair Powell. And then we got at 8 a.m., we got the JOLTS job openings report. So we're going to listen to Fed Chair. I'm not sure if he's going to announce an interest rate adjustment today or not. So I think that's what the excitement is about. Let's find out at 8 o'clock today. We're going to be all together here. So we'll have to make sure we set our alarm so that we come back. Let me do that, because sometimes I get busy doing other things and we miss the big news events. So let's come in here and set one at 7. I'm going to set my alarm at 7:50. Let's go 7:50. 38, 47, let's do 55. 7:55 a.m. And I'm going to save that. All right, so we got an alarm that's going to ring for us at 7:55. That's my time. Of course, that's UTC 7, as you can see, and you're going to have to make the adjustments for your time frame. And this is Wednesday, March 6th, so we are on the right date, right? So, okay, so that's what we got going. 8 o'clock, my time, UTC 7. We're going to watch Fed Chair speak and see what he says, and probably ought to go watch him on the internet and see what he says, listen to the actual report. But we'll see. Sometimes that's annoying to me. Just it distracts me from my trading. So when I get a report, I don't generally watch the report itself. But it might be interesting to watch him this time, because it's supposed to be changing interest rates. We'll see if he does. It looks like they're anticipating that he's going to. Markets are already getting all excited to go up. Well, that's not the opening bell, was it? Oh, it was. That's the opening bell. There we go. Ponies are running. 35 seconds into it. So let's bring this thing. It's a pretty quiet open. NASDAQ did a little bit of a jump right there on the open. So we got a big rally on the open and then a flush. Pretty common, pretty typical stuff here going on. We should be a big mover day today. So if we wanted to, we could put a spread on the options. Let's go look at the options spread. So the market should move big today, but problem with that is that there's going to be built in a lot of, see, look at that. The theoretical value for an option at the money right now is $573. You're going to have to pay $625 for it. And so that is a $75 premium to buy that option. And as soon as the information is known, that's the put. Let's see, look at the calls. Oh, got to go to 0 DTE. Oh, wait a second. We're on the wrong market. There we go. 0 DTE on the option. Theoretical value is $610, and it's trading for $587. Well, that's not too bad. You could buy a call for a relatively equal price. There's not a lot of implied volatility in that one. 594, 587. If you want to buy a put, that's not good. That means that they think the market's going to fall, or at least they're protecting against it. There's a lot of people buying puts. 540, 575. Oh, then now it's tightening up. Closer we get to the report, the further that'll probably spread. 40 to 75. That's not bad right now. Could buy one of those, and we could come over here to our calls, and we could buy one of those. They're right on the money right now. So let's go ahead and we'll put one of those on. Okay, so we got ourselves a little straddle. Okay, so we're straddling the market on the S&P 500 for this report that's coming up here in 30 minutes. We watched the theoretical value. The theoretical value came in a little high when we first looked at it, but then there in the first few minutes, it leveled off a little bit. So I grabbed it while it was there. And we generally see the theoretical value increase, or the premium increase over the theoretical value quite significantly when there's a big report coming. And that's that volatility crunch that we get in there. And the minute the news is known, bam, that thing slams back down and you lose all that money. So the fact that both of those were pretty equal when we got into them, that's not too bad. We didn't get them for a discount. We still had to pay a little bit of a premium for them. So we'll have to wait and see what happens. But we got the Dow rallying up here. Let's bring this back down so we can see the charts a little bit better. So there's our first trade. We got our first trade on. Let's see what else is going on. We're going to watch this thing. We got good class for you. So be ready. We're going to go over and look at the seasonal nature of the futures market today. I got some questions that were brought up, so we're going to just watch the market here for a little bit. Let a few more guys show up. Might be a little early for some of them, and then we'll pop over and start looking at the futures market. We do have a good showing here this morning. People saying good morning. So we got Michael Bruce saying hello. It's great to have you, Michael. We got Bruce R saying good morning. Great to have you, Michael. Bruce R. We got John David Lundberg in the house. So there's John David Lundberg. We got Kirk Schwartz. Good morning. WNC Randy Owens. Good to see you, Randy, with his Owens RV Mobile Repair. We've also got Gary Thomas. Good morning, Lan. Hey, WNC Randy Owens. Where are you? Where's your Owens RV Mobile Repair at? Where are you located? Throw that out here are you in St. George? Are you here in the St. George area with me? Just curious where you're out of. All right, we've got the NASDAQ starting to fall. Taking out of that we see that a lot, don't we, here with the NASDAQ in the morning. We see a nice we've been seeing little triangle formations, and then it drops out of those triangles. Those little wedge patterns. A wedge pattern is nothing more than where the market starts sideways and has lower highs and higher lows. It just goes into forms a little pattern like that. That's what that is. Bottom side is an area of support. The upside is an area of resistance. Generally speaking, we look for the market to either break out to the upside or break out to the downside, because it's an area of consolidation where the market's going into a point, And so where you have lower highs and higher lows, we don't know the direction other than the previous trends. Previous trend in this case was up. These are generally considered continuation formations because they come up, they hesitate a little bit, and then they continue up again. That's why we look for the A, B, C, D patterns like that out of those. But it doesn't mean they can't reverse. They certainly can. Market can do anything it wants, but generally speaking, those little triangles, we anticipate it to be a continuation formation is what we call those. So this one flushed out the bottom. It wasn't a very well-formed triangle. It's kind of an ugly little thing in there, but nonetheless, that's what it was. And it fell out the bottom. So we got a reversal happen on these markets. Should be paying money on our call. So it's a little bit too early into the trade to see how our options are doing. Being a little anxious here on our options. But we're down $25. That probably on the call. Buy the put. Put. That's the one I thought would be going up. But it's down $25. That probably had a little bit more of a volatility crush on it already than what I thought. Call options obviously not going to be making any money if the market's falling away from it. So I'm surprised the put option isn't increasing in value. We'll have to wait and watch that, see. Oh, there they go. They're changing now. So we got 112 loss. So it's even. We're back to zero. We're making as much on the call as on the put as we're losing on the call. So they had to switch and update. All right. So we'll come back here. Okay. So we're just going to sit there. That's not going to be much of a excitement trade. That's going to have to wait for most of the day to go by to find out if that makes anything. All right. So what are we looking at? This market's still flushing down just a little bit here on the Russell. Everything it made this morning, it's coming back down to the magic blue line. Here's what we're seeing right here. I was saying that we got a good little lesson for us today. We're going to go look at the seasonal nature of the futures market. We're going to do some scans and check things out. I kind of want to watch these markets a little bit, see if there's not an opportunity for us to maybe do a little scalp and trail like we talked about yesterday. We still got our number 13s up in here. So we can, let's see, this says stop at 15. That one says stop at 20. What did we end up with? 13 says 15, 15. Limit 30. That's all right. This says 20, 20, 40, 40. Well, that's right, but that's not the way we want to really kind of do that. Is this one? Oh, they're both ATRs. So that's what we did. We did a 15 and we did a 20. Oh, that's the scalp and the trail. Scalp at 15, trail at 20. Yeah, let's see what it does. We'll try it. We may have to make some adjustments on that. In the morning session, the markets are a little bit bigger. Let's see how big this trend is, all the way from the peak to the valley. Oh, that's not. Oh, well, 113. Oh, that's 11. That's a big move. That's an enormous move because that's $113 on the micro mini. That'd be $11,000 move on the mini. So this market's really, really heated up right now. So those numbers right there, stop at 15. That's certainly not going to work. Oh, look at that thing flushed down. Our put option is, see if those things are updating. 112.50. They're still not. Huh. Am I on the right one? Oh, we're not on the right one. There we go. So that put option, it's now, if we wanted to buy it, it's up $700. 680, 700. Those numbers aren't changing. What do we pay for it? $575 on the put. $587.50 on the put. $587.50. So let's go see what it's at now. 567. So that's about right, I guess. It's just sitting there at 706.25. All right. Well, we'll just let it go. It's just sitting there. being equal profit to loss on that one. Okay, so let's go look at the Russell. We got Russell's getting ready to bounce. So do we see? Well, let's test out our system here. So this is our scalp. If we wanted to catch the reversal or the bounce, what would that do to us? That's a really tight. That's that tight stop. I don't know if we can do that with this market. We might have to adjust those. Let's bring this thing. The first thing we haven't done is we haven't looked at our long-term charts. We need to do our due diligence in here, Land. So let's come back out here and look at our daily chart. So this is what we're looking at. We've looked at these before. You can see some of our drawings in here that we've had. And this is kind of where we're at on a daily chart. On the daily charts, I like to have the bulls and bears turned on, so we can see a little bit better. I'm going to turn off the ATR. So this market's just been really heavy bullish. This is the Dow. Let's go look at it on a longer term basis. Oh, look at what's happening here. Look at this, guys. We got this one big long run. We got a little counter trend coming in here. We got another nice little counter trend, a little run up in here, counter trend, and then a failure. Look at that. Look at that. Oh my goodness. A1, right? B1, C1. So that's our A1, that's our B1, that's our C1. Ooh, let's put in the others, shall we? Let's put in, there's X1. There's X2. There's X3. There's X3 right there. There's X2 right there. There's X1 right there. So what does that mean to us? What does that mean to us? That means we've reached up into the full Elliott wave. That C drive failed, but it could easily come in and continue. I mean, that's not saying that it's going to completely fail. But if it breaks those blue lights, that's not good. This thing's coming into another nice little wedge pattern, just like we talked about earlier. Actually, a little bit more like that. I guess that was the first one. So it's broken out of that little wedge pattern right there to the downside. So that nice little area of support cracked right there yesterday, fell, and then today it's trying to decide if it wants to go down and break those blue lights. We got those set correctly. Progressive formula. That's how we set it. Now we're reading the Elliott waves. Okay, so that's your Elliott wave setting right there. And there's your drive one. There's counter trend. Kind of double broke those. We got the next drive, counter trend, and into that C drive. And that C drive's failing on us. We need to either, it's in a decision point right now, guys. It's in a decision point. So it's going to either, well, market's going to either go up or down, or it's going to go sideways. But we would expect it to break out of that thing and continue higher. Or if it comes down and breaks those blue lights, then we would expect it to come down, try to rally a little bit, and then come back down again like this. If it breaks out the top, we would expect it to go up. Let me redraw this one. We'd expect it to go up, break that high, come back down, and go back up like that. So it depends on how it comes out of this triangle formation, and depending on what it's going to do, what we think it's going to do from there. If a Fibonacci is back to us, there's your Fibonacci ruler all the way back to the, that's a long ways for that thing to drop. If it comes back to the Fibonacci sweet spot. Our first goal on the downside would look for it to come down and test this low right here. So we need to draw that low in there. And then we draw this low in here. And those are our target zones. Let's put those in at red. Target zones. Here's the next one. So those are our target zones to the downside before we get down to the Fibonacci sweet spot. That's if that thing made that full retracement back down that far on the Dow. But we could also break out the top. You could also come down, break the blue lights, and then go up and make a D drive, which we don't want to see it do that. Don't break the blue lights if you're going to go back up. That's not a good pullback we want to see. I mean, it can come down, break them, and turn and go and make a D drive and go up like that. It's just rare. It's really rare. Okay. Not that it can't happen, certainly does. It's just very, very rare. And we as small speculators, we don't like to trade rare. We like to trade things that have happened a lot. And that's why we look at these. That's why we do our technical analysis. That's why we learn to read charts, because we want to know what the probabilities are. And the probabilities of that thing going into a D drive is very, very slim. Doesn't happen very often. So it's like sitting at the blackjack table waiting for two aces. I'm only going to trade two aces. Well, those don't come along very often. You're going to sit a lot, wait. You're going to have lots of trades that go by or lots of losers. Okay. So, Lan, how do I know the probabilities? How do I know what the probabilities are? I'm glad you asked. Thanks for asking. There's a little book out on Amazon you can go buy. It's called Stock Market Playbook of Strategies. And in that book on Amazon, it has all the probabilities. So when I came in here and said A1, X1, B1, B2, C, you know what those are because those probabilities are out on Amazon in this book called Stock Market Playbook of Strategies. To find that book, all you have to do is go search Lan H. Turner on Amazon, and that book will pop right up, and you can buy it, and you'll know all the probabilities you start doing here in class. That book, that manual, is the class manual to this class. So if you want the manual to the class, go get it. For those of you who don't know who I am, I know we always have new people, and we got a good group of people in here today. So we got a lot of people. So I'm happy to see everybody. Some of you might be new. I'll just give you a little bit of a introduction. I haven't done that yet today. My name is Lan Turner. I'm a former instructor at the Chicago Mercantile Exchange and the Board of Trade's Education Centers. And I'm currently an instructor of finance at Utah Tech University. And I teach in the continuing education class. So that means that we have mostly adults. Now that we can't have some of the younger folks in there, we certainly do on occasion, but for the most part, we have continuing education. So we have, I don't want to say adult classes, because that would insinuate that the kids who go to the college are not adults, and they are. Just generally our class, because it's a continuing education class, they're a little bit older people. Older, not old. Older. Okay. There you go. So I don't want to make anybody feel bad. No, but so it's the continuing education course, and that is the manual to that class out on Amazon. You can go pick it up, and then this is the lab for that class, and we teach classes down at the university, and then we come out here to the YouTubes and we run our labs. And so everybody in the whole world is welcome. You're all welcome. Everybody's welcome to come to our YouTube labs and work with us. But this is primarily was set aside for the university students to come and learn the things that are in that book. So if you want the manual to the book, go pick it up and come along with us. The software I'm using, for those of you who don't know, I think I have it here. Maybe I don't. Oh, I do. It's right here. Those of you who want to know the software that I'm using, maybe I don't have it. I thought I had it right here. Yep. It's taking a minute to come up. There it is. That's the software I'm using. So if you want to join along with us and get the software that we're using here in class, I use software called Track and Trade Live Stocks, Track and Trade Live Futures. It's won Stocks and Commodities Annual Reader's Choice Awards 7 times. That actually says 6 right there. I haven't changed it or updated this graphic. We've received it 1 more time since then. And so this is the software we're using, and you can go get it over there at trackandtrade.com. Download it. You can have it for free for 2 weeks. And join us in class and play with it and see if it's something that you can use, and you can do all the stuff we're doing. All right. So there you go. That's the daily chart on Dow. And I'm not going to go spend a whole lot of time doing the same things over here. Oh, would be better spend just a minute on the NASDAQ, though. As I said, they're all roughly kind of carried they're not all. These things are a lot different. Usually they're pretty close to the same, but we're getting some divergence between them, especially in that Russell. Look at that Russell. That Russell made that butterfly pattern that we were talking about last time. We talked about this one. And now it's coming up here and making that butterfly pattern. Generally, we see that thing cascade out of that butterfly pattern like that. That's very bearish. Whoosh, down it comes, and usually it comes down and tests this previous low down here. Now, we did have a little jig jog in there. We had a little ABC pattern in here. Almost another little jig jog in there, a little jig jog in there. But this thing's up there making that final touch on that on that butterfly pattern. So that's our peak at the butterfly. Look at that. Came right up and touched it like a train on rails. Generally speaking, that falls out of the bottom there. So we've got our nice little 3-drive pattern. Let's get rid of all this stuff. Let's get rid of this thing here. We don't need that. Squeeze it down a little bit. It helps you see the patterns a little better. But there's drive 1. It's almost like drive 2 that didn't break, isn't it? And then there's another drive, but that's like a one big long wimpy drive. I don't know. That's bearish. Doesn't look very bullish to me. Does not look very bullish to me. We'll have to see what the news is in 10 minutes. See if they're going to lower interest rates. All right. Our S&P, our options are making $67. We're up $67 on our options. Actually, more than that, because I was goofing off last night and I hit the buttons a few times testing some stuff, and the account was down $12 or something. All right, so that's that one. The S&P. Look at these drives, boy. Drive 1, drive 2, drive 3, drive 4. So we're in that 4th drive. Yeah, 4th drive. So that's a D drive right there. Very rare. Very rare. You know what's pulling these markets up, right, into these very rare moves? It's all that AI stuff that's going on. AI is going crazy, man. I mean, it is. If you are not part of AI, you are not part of the world. And Apple tumbled the other day because they are not playing in the AI world yet. They have not announced a single thing. And their stock tumbled again. I was very disappointed to see that. But I guess not. I haven't owned any Apple for a while. And it's been struggling. And I told everybody, I said, watch out for Apple. Not a good buy right now. So as it pulls back, they've been buying back their own stock to try and prop things up. They're not able to keep up with the AI race, and they're suffering for that. And so they're pulling down some of these markets because of it. They're such a big holder. A lot of these big markets hold a lot of that Apple stock, and with Apple suffering like that, they got to get in the AI race. They got to announce something, or else they're getting left behind really bad. They better come out with something pretty fancy. Drive 1, drive 2, drive 3. Look at that, drive 4, drive 5 on the NASDAQ. Holy cow. This is all that AI stuff going into these extremes that are just outrageously high. Microsoft, Meta, these companies are just yanking this thing up by its collar. That's just craziness. That's crazy, crazy, crazy. Land, do you think it's going to make a 1, 2, 3, 4, 5, 6th drive before it makes a pullback? Man, I don't know. If you break that down into two separate pieces, we've got drive 1, we got drive 2, and then we got a little counter trend there that gave us not a reset. It never did hit red, but it was pretty far back. So then you got a drive 1, drive 2, drive 3 again right there. So you can almost look at it like that. We've got 3 drives to the top, and each one's getting smaller and smaller. Nice big one, a little bit smaller, a little bit smaller, a little bit smaller, a little bit smaller. So it's having a hard time making new drives. I don't want to be a buyer right here. I don't have a lot in these markets right now. I got a little bit, but I've got a stop in there, so I might get stopped out. I got to stop, put a break even on I've been dollar cost averaging in, building a little bit of a pyramid, taking some pillars off. So I've been pulling my average price has been coming up on this thing. So my average price is up here, and I got to stop set in at break even. So if it flushes down, it might stop me out. But I've been taking profits along the way. So I've been doing pretty good, pretty happy with what I've done so far. Pretty happy with these markets, man. I've been making a lot of money. More money than I made in a long time. That's a good feeling to have. All right, that's what we're looking at over here on the long-term charts. Let's go look at a 15-minute chart on all these things, see how they're looking. So 15-minute chart. There's our alarm going off. We got 5 minutes let's snooze that. How long does that snooze? Probably 8 minutes. Put it on 8 minutes. Our alarm goes off. We got 5 minutes until the Fed speaks. So everybody's sitting on their hands. So this is what the 15-minute looks like on the Dow. So this was yesterday's flush. Ooh, flushed right down. And that might be because somebody has preemptive knowledge that they're not going to raise interest rate or lower interest rates. That's what oftentimes happens. You see the guys who actually do know the inside story, and they're not supposed to trade that, but they always do. They can't help themselves. They sneak in there and tell grandma, hey, grandma, go get rid of your stock. It ain't going to go up tomorrow. I know I'm not supposed to tell you this, but grandma, remember that special account you and I opened up 3 months ago? Go pull the money out. Hey, grandpa. Hey, sister. Remember when I told you I'd send you that number if I said 1, it meant buy, and I said 2, it meant sell. Did you get the text for number 2 yesterday? Just checking in. I didn't hear back on you. That never happens. Stop it, Len. Get your tinfoil hat off. So what happens is then that's market flushes because they have inside information. But nobody trades inside information in this country. This is honest country. Land of the free, home of the brave. Okay, so we got 3 minutes until this thing takes off. What's this one looking like? This one's got the same thing. Yesterday we got a big old flush out of here. Got a little bit of a rally pulling up just in time to flush it again, I guess. I don't know. We'll have to wait and see. This might be the excitement going into it. Well, they're going to raise interest rates or the lower interest rates. This market's going to go to the moon. Same thing here on the Russell. Russell's getting ready. Oh, it had a little bit of nervousness yesterday. Little nervousness. That was an ugly market. Remember, we tried to trade that a little bit yesterday, and that thing was impossible to make money on. It just did not go anywhere. So we got a little positive news, but it just went right back into that same bracket. So we're kind of stuck in a neutral zone here with the Russell. Well, we've got our order on, so we're going to either make or lose some money one way or the other. We just need the market to move good and hard. We need a good hard move for our S&P for that order to go. We need to either see it flush hard, boom, 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 which we don't really want to do. I mean, nobody wants to see the S&P fall, right? But it's got to have a correction. I mean, it can't go straight up all the time. But if it rallied hard out of this thing, we'd make money. The only thing that it would be bad for us is if it kind of just died and went sideways. If it did that, we're in trouble. Don't want it to do that. We want to get outside that box. And I didn't measure that box. I just eyeballed it. But somewhere around there is probably where that's at. So we need to see that thing go. We got, 2 minutes? 58, 9, 62 minutes. Should we watch it on a smaller time frame? Should we watch it down here on a 2-minute chart? Watch all of them. Look at them go. There's our 2-minute chart. Man, that Dow looks great on a 2-minute chart. Yes, it does. That's why we use a 2-minute chart. We like the 2-minute chart. Okay, see how it's flushed out of there? That's why we're making a little bit of money, $62.50 so far on our oh no, $62.50. $12.50 was my dinking around yesterday. Michael Bruce says he'd rather go. Yeah, that's true. I don't trade the Bitcoin through here. I trade it somewhere else. I do all my analysis here and I watch it here, but I don't trade it here. We can day trade it here and the margin's not bad. You just can't hold it overnight. So I've day traded it here. I just don't hold it overnight here. Where do you hold your Bitcoin, Lan? Well, I have actually 2 or 3 accounts with different companies. Do you want to tell us? No, not really. I don't want to endorse any one of them. I don't really like any of them. It's just kind of, you have to just pick. There it goes. There it goes. Flush, flush, flush like a toilet. So I guess he's not going to raise lower interest rates. Is that what that means? Any of you guys have him up? If I wasn't here on YouTube, I'd have him up on the screen. We could watch what he said, but makes it really hard when I'm trying to do all this YouTube stuff and then to go and watch YouTube videos too. I can't be projecting on YouTube and watching YouTube at the same time. That's kind of a little messy. So I'm kind of restricted on what I could do. I guess I could I have another laptop. I could have pulled up a different computer. Then I start to strain my internet, and then you guys are like, hey, I can't hear you. You keep cutting out. So only so much one plebeian internet service one guy that doesn't know what the heck he's doing anyway on YouTube can do. Only so much I can do. I don't know what the heck I'm doing anyway. Just an amateur here. I don't even know if I could call myself an amateur. More like a beginner. I'm a beginner, guys, when it comes to this YouTube stuff. Let's go to a 1 minute chart and see what this is doing. Well, it flopped and flipped and flopped. It flip-flopped a little bit. Now it's just kind of, what the heck's going on, dude? You're not going to tell them anything? No good news? Nothing? Maybe you gave them a little good news and they're like, well, maybe that's not all such bad news. So it pulled back a little bit. It didn't just flush hard. Why is it pulling back? What's he telling them? What's he telling them? Do any of you guys have him pulled up? What's he saying? For the next one, next time he gets on there and announces, I'm going to see if I can't figure out a way to have it streaming to me. I don't know how I can stream on YouTube and then be watching YouTube at the same time. Maybe I can. Maybe that's just a psychological thing in my brain that says you can't do that, Lan. Maybe you can do that. Well, he's not doing anything exciting. And they haven't reported anything. I mean, that's the testimony going on at 8 o'clock. He's not saying, maybe this isn't a talk. Maybe it's just testimony. Maybe he's up in Capitol Hill or something. Maybe I read that wrong. Let's see what he says. The benchmark interest rate in the United States is 5.50. The Fed fund rate is likely at its peak for the tightening cycle, and it will likely appropriate to begin dialing back policy restraints some points this year, although only when there is greater confidence that inflation is moving sustainably low toward 2%. Prepared remarks from Fed Chair Powell for a semi-annual monetary policy report to the Congress showed Powell reinforced toward the 2% inflation is not assured there is a risk of reducing that. So I don't think this was a restraint either too soon or too late. As Fed will continue to assess. Oh, he's just talking to the Congress. He's not going to give us an interest rate. He's just telling us whether he thinks well, that's disappointing. So he's not raising interest rates right now. As a result, the Fed will continue to assess the incoming data to evolve an outlook and the balance of risks. We'll keep watching it. That's all he's saying. That's not an interest rate raise. I guess I could have noticed that because if there was an interest rate raise, there would have been over here a forecast, a consensus, a previous, and then what it actually was returning over to. Well, that was disappointing. We got another Fed Daily speaks at 10 o'clock, and Fed Kashkari speaks at 1:15. We got an RCM TIPP Economics Optimism Index. Oh, that doesn't have a time on it. Well, it went down, whatever it was. Forecast to be 49. It's all the way. The previous was 44 and all the way down to 43.5. So that sucks. People are not very optimistic on the economy. That's going down. Well, whatever he's saying, it's flushing a little bit here. So we're making a little money on our option. Question is, did we want to go in and try and take a short position on a trend on a scalping trail? We could try it. Does it want to break those blue lights and fall, or does it want to? I think it's going to. Oh, that put that stop way too close. Oh, I don't want that quite that close. Let's put it here for a minute. Let's go back full screen so you guys can see what's happening. Oh, it is not going to fall like the rest of them. I thought that thing might fall down there and break. Come on. Fall, buddy, fall. Down, down, down. Be patient, Lan. I don't like being patient when it's going against me. That's not a time to be patient. That's a time to be like, what the WTF? You stupid market. I can always get back in. I don't want to have it go against me. I'm not supposed to turn green just as you go short. We were looking for that market to continue this downtrend. But it does that stupid thing, doesn't it? Where we get an arrow like this, and then it comes down 4 bars, and then it goes up, spikes that little yellow dot right there, and then it turns and falls again. That's a pattern that's in our book, in our little slideshows. That's why I always say this is an advanced strategy. Come in and buy right here, as it spikes that little thing, and then it turns and falls. See what everything else is doing. See, everything else is tanking down. Everything's tanking. So we should have taken that. Now I'll come back to miss my opportunity again. I should have taken it up higher. Clear up there by that yellow dot. What the heck, Lan? Quit talking. No, I can't quit talking. Quit teaching. No, I can't quit teaching. Come on, you rotten dog. This is a 1-minute chart too. I mean, I got a hot plate that keeps my tea warm, and I just touched it with my hand. Oh, just burned me. Michael Bruce says he's sitting on his hands. Ow. Should we add another one to it there? Do you think it's going to continue to fall? We could take another one. All right, now we can scalp and trail. So we put a limit out here. Comes down and tests this low. Scalp one out. Let the other one trail. How far do you want to trail? Well, that yellow dot is a long ways back. So I don't want to trail that far. So what I'm going to do is I'll just put my stop right in here, just behind the current bar. You want to be behind the current bar, Lan? Well, it should not break. It should not break that. If it does, it's being too choppy, and we're just, you piece of shit. Oh, damn it. Now I have to go confess to, now I have to go confess to YouTube that I swore on the video. All right, Lan, what are you going to do? You're losing money. You're losing all the money you're making on your option. I know. Market didn't go for me. Didn't drop. Didn't break. It's bouncing off that blue line. It's bouncing off the blue line, starting to try to go up. It's going to touch that yellow dot. There it is. It's touching it right now. Boom. Okay, so I took my second one on the pullback, which might be the wrong thing to do. Get our heinies handed to us. It's going the wrong way. You going to take the reprieve? I could put the reprieve in there. If it comes down and touches the reprieve, we take one off. Otherwise, we get stopped out with 2 and not just 1. Come on, you rotten little dog. Well, it's just being stupid, isn't it? At least it's being stupid in our favor. If it was just taking off to the moon, then we'd be mad. Okay, took the reprieve. Now we're only short 1 again. Come on, you rotten little thing. What you gonna do? What you gonna do? Okay, you gonna take the reprieve? Put the reprieve in there. It's not gonna give it to me. It's gonna just take off like a rocket ship and blast to the moon. Take me with it. You dirty little thing. So much for everything falling except for the Dow. Except for the one we thought was going to fall. Well, I guess learning how to mitigate a loss is a good lesson too. Come on, give me the reprieve. I can suck it up there and make the reprieve be a little loss, but I'd rather it come down to me. Come down there. Come on. Come on, buddy. Shoot. Daggone it. Missed it. If it holds above that white line, we just have to get out and take our lumps. Nothing you can do else. Don't want to hang on to it. Of course, that's right where 1, 2, 3, 4, 5. That's right where we usually get the pullback. The last time it went 1, 2, 3, 4, 5, 6, 7, 8. I don't want to sit through 8. Come on, fail. It's agonizing 27 seconds. Take the reprieve, land. Take the reprieve. That's not what I meant to do. I meant to be short one from there. We'll try it again. I accidentally hit the wrong button. Supposed to be short from one up there at that green line right there. It's not too bad, but not where I want to be. Dead market. Come on. Come on. I want to make a nice little trade before we went over and started looking at the seasonals. It's just not giving us anything. Come on, you rotten little thing. All right, I don't have patience for this rotten market. Let's go do something else. Let's go do something fun. I'm already here for something fun. All right, guys, let's go do something fun. Let's go look at the seasonal nature of markets. Now, the first thing I want to do is I want to start this section off with the question that came to me from Lowdown Killer. Are you here today, Lowdown Killer? Because we're going to read and make you famous. Here we go. Great lesson. He's commenting out here on YouTube. If you guys want to comment out on the YouTube thing, that would be great. I love it when you guys go comment. I mean, it's great to have you comment in here, say hello, but go ask questions out here on the YouTube thing on the video. I answer all of them. Go out there and see them, because a lot of guys ask questions out there, and there's really great questions and answers out there from the lessons that we had. So if you guys are not participating in the comment section, go do that. I like it. I like to go out and spend time with you guys after the class is over, answering questions and seeing what we can work towards. A lot of the times, the things that we do in the next class has to do with what questions were asked in the previous class. So go do that. Hey, Jay Richards just said he bought the book. Way to go, Jay Richards. Just bought the book. And come and join us. Read that book, and you're going to see that all the stuff we're doing here in this class right in that book. So great to have you have that book. Great to have it. And I always like to complain about Amazon. I sell a lot of those books, but I don't make anything. Last year, I lost $200 selling all those books because Amazon takes all my profit. They're smart. They are really smart. Those buggers, they have it down to a T. They took right down a whole year's worth of profit. They took all of it right down and left me with negative $200. they, they really got their system dialed in. So just enough that I want to keep doing it, but not enough that I make any money on it. That's okay. All right. So Lowdown Killer says, great lesson on the OCOs. Now, if you can tell the developer team to make 8 of them so we don't have to switch drop down so much. I've already asked them for more. So that's already on the wish list, Lowdown Killer. So I will ask him for 8. I asked him for 2, and I still haven't even got 2 more. So also a quick question. You are going to do the trade miner seasonals for futures and it dawned on to me with the stocks version, you can just buy some shares for the few weeks and earn a profit. No biggie. But for the futures, since it is crazy money to run contracts overnight, how does that work? You can set it to show results for just the day. I am curious to find out. No, you cannot set trade miner for day trading. It doesn't do intraday data. I don't know what that would take. That would be crazy. That'd be crazy. It'd be crazy. Anyway, no, it's just for end of day, and it's just for trends. Now, what we do if we're going to use the seasonal nature of the markets for day trading, we'll look at a trend during a specific period of time. So for like a 2-week period of time and say, well, corn is generally up during this period of time, or soybeans are generally up, or gold is generally up for this 2-week period. Therefore, when we day trade it, we just have a bullish bias. All right, so that's how we use it in day trading. But we're still exiting at the end of our position. We're always taking our positions off, before the end of the day. But that doesn't mean you have to do that with all futures. There's the day trading side of futures is small, tiny in comparison to the people who hold them overnight. So holding futures contracts overnight is really popular. I mean, way more popular than just day trading. That's just what I like to do. I just like to use the futures market to day trade, and then take that money and put it in the stock market. That's just what I do. I don't do so much overnight stuff. I used to do a lot more overnight stuff because we didn't have a lot of, the platforms didn't allow for it. It was just overnight stuff. So now we've got day trading stuff, and I've just kind of been enamored with it so much I haven't gone back and done a lot of the day trade, the position style trading, overnight trading. But we have a lot of students in our classes who do a lot of overnight trading. I was just talking to one a couple of days ago, and he was up like 25 grand on his corn position. So, and he holds it overnight, and he actually uses a range bar 6. He gets it to break even and he leaves it there, and he lets it run, and then he manages it based on range bar 6, but he does it for weeks and months. So, and then he builds his contracts. He's been with me for, man alive, he's been one of my students for 15 years. So he's been doing it a while, but he's also a farmer. So he does hedging. So he's got corn in the field, and then I taught him how to hedge it on the stock market. And so he does so well now with his trading that he's like, I want my son to come and run the farm because I make more money just trading it than I do go out in there and ride the tractor. He says, I'm getting too old. I don't want to ride the tractor anymore. I just want to come and trade corn, be a corn trader instead of a corn farmer. So anyway, there's definitely guys that hold it overnight. Let's go look at that, because it's a lot of the, when you look at the indexes, which is what we focus most of our attention on, the overnight does jump quite significantly, but the overnight on a lot of these other things like corn, wheat, soybeans, gold, silver, some of these things, and you have micros and you have minis, and it's not bad. It goes up a couple $1,000s. That's it. It's like you can invest a couple $1,000s in corn. That's not a big deal. So let's go take a look at it. All right. So what we're going to do is we're going to look for this again. For those of you who don't know, this is Trade Miner. It is a tool that tells us the seasonal nature of markets. Now it's an AI system, so you have to prompt it, and it's got a built-in prompt up here. So what we do is we find and select high probability trading opportunities for our portfolios. So the concept here is that, well, markets have a tendency to do the same thing over and over and over and over, year after year after year after year. You plant at the same time every year, you harvest at the same time every year, you bring them to market at the same time every year, susceptible to damage at the same time every year, transportation costs same time every year, storage fees same time every year. So you have these different types of commodities. You have perpetually produced commodities like gold and silver, and then you also have annually produced commodities like corn, wheat, and soybeans. And so it's easy to understand corn, wheat, and soybeans, they would have very seasonal cycles to them as we go through the planting and harvesting cycles. And so that's what causes markets to do the same thing over and over and over a year. And that's what this software points out to us. It tells us when those events occur. And you'd be surprised. Annually produced, obviously have very seasonal natures to them, but so do perpetually produced. I mean, gold has a very seasonal nature that comes in waves. And so you always want to be very mindful of that when you're trading it, whether, for an investment over in the stock market, or whether you're going to do it day traded in the futures market, or whether you're going to hold it for a longer term period in the futures market. So let's go find out what's happening right now. Now you can do this by symbol, and you can just come in and say, well, I just want to come down here and look at, Japanese yen, cocoa, cotton, coffee, S&P 500. These are the ones I've got picked in here. If you come into the settings, you can pick the ones you want. And I've kind of turned on some and turned off some that I don't want. I have the currencies turned on just for fun. I don't do a lot of currency trading anymore. I used to do a lot of currency trading. I don't do that so much anymore. I just kind of focus. I just kind of, I don't want to be a jack of all trades and a master of none. So I'm trying to be a master of just what I do, which is day trade those indexes. I like to run options. I do a lot of options, and then take that money and I put it over in the stock market. That's what I do with it. Take these accounts. I just keep these accounts small over here. When I make money, I take it out and put it somewhere else. Make money, take it out, put it somewhere else. If I lose money, I wait until I bring it back, and then I make money, and then I take it out. So I just kind of run this as an income source, and then take the money over and invest it in the stock market. That's what I do. You can take it out, go buy Lamborghinis with it if you want. I don't care. Do whatever you want with it. I'm just telling you what I do. So this comes in here. There's Trade Miner Pro futures. Search for trends in the month of, and I'm going to say the month of March because we're coming into March. So this is find trends that have won at least, and we're going to put in here, let's leave it at 80. That's the default. 80% of the time showing. We can do, since in the futures market we can go long and short. Doesn't matter. There's no penalty. There's no interest. There's no fees. There's nothing. You can go long and short either way. So we're going to just do both. And we're going to list trends that last at least 10 trading days, but no more than, let's do 30 because I like to do a whole month. Yeah, let's do 30 trading days. Find at least, let's go 25 trading days. Find it because we got weekends. So we got trading days. Find at least 10 years of history. All right. So it's got to be at least 10 years, 80% winning rate over at least 10 years, 10 years in a row. Okay. At least 10 years of time. If it hasn't got 10 years, then we don't want to see it. We can have more than 10 years. This is just the least it can have is 10 years. And sometimes we'll raise that. Sometimes we'll lower it. We can remove the same symbol base overlapping trade dates based on the front month. Based on the score, we'll do front month. Remove the, we might turn that on and off. We'll see. Actually, why don't we turn it off first? Remove same symbol duplicate start dates. We don't need that. Remove same symbol overlapping dates. We'll turn that on. Let's see how many we get with that. So we're going to go ahead and have the database search scan for what's going on. See where all our history's at. Okay, so this is historically speaking. This is what the markets have done. All right, so we can come back and see. We got 224 different results, and we got a score. The score, the highest score you can get is 5, and then we can look at the dates. So let's look at the start dates. We'll sort it by date. You can just sort it by clicking the header. So the header right up here, March 1st. These are yellow. With our first green is that one right there on the score, 3.59, and it's bearish, soybeans. March 5th to March 27th, 81% of the time over the last 16 years. Soybeans is returned on average 46% on your return on your margin, or about $1,000 on a quantity one contract. Okay, so that is our first one. It's coming up March 5th. What's today? The 6th. So that was yesterday. So we're going to be soybeans. We're going to be looking to be bearish. Let's go pull up soybeans. Back to our software. And, oh, look, that stupid market diddled around in here. We got out right here. It went up again. That's good. We didn't have to. That's just doing stupid down, nothing Dow. The nothing Dow. Everything just died on us, didn't it? I guess we got a little bit of a movement here on the Russell. We could have probably traded it with our scalping trail. It's at least being a little snaky. Well, let's go see Soybeans. So that's not the right one. Man, what are you doing? Made a mistake. Delete that. Okay. Okay. Don't want random. We want, yeah, random. Soybeans. Soybeans, 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 soybeans. Should we do, no, we'll just do the regular. Oh, we don't want that soybeans. That's March soybeans. We want May soybeans. How's May look? Well, we got some good volume in May soybeans. That's not the one I wanted to raise up. Let's go look at July soybeans. 68. May's got 165. I'm looking at the volume to see how much volume's in each contract month. So we're going to go out to July. Oh, I did July. Let's go out to September. September's pretty quiet. Let's do November soybeans. This is one that's really popular, but we're not quite there yet. 36. So I think May is our one we're going to watch. So May soybeans. Let's get rid of the ATR. We don't need that. All right, just bulls and bears. There's daily soybeans. So look at that. Holy cow. Drive 1, drive 2, drive 3. We're at the bottom of a drive 3. We got our counter trend. We got our counter trend. We got another little counter trend. Okay. Pull out your manual. Take a look at it. Look at the probabilities. Let's go read this thing. All right. So we're going to come back, get in your manual, take a look at the probabilities, read this with me. I'm going to show you how to do this. All right. So this is we're going to call this, it's an X2, but it failed on an X2. So let's say it failed on an X2 right here. So we're going to start with the previous trend, and then we're going to move forward from there. So that's X2. So this is going to be, so it's an X2, right? A1 X2 slash A1S. So that's your first down to the first side. So this is short. So for all of you guys who are used to seeing these things going long, counting these things going down the other side is a little bit more difficult because you have to think backwards. All right. So let's come in here, and then we're going to come in and we're going to say this is now a new X1S slash A1, right? Low probability of success. X1S A1, very low probability of success. Look in your book. It'll tell you very low probability of success. Okay. Success meaning going this direction. Okay. Taking the new A1 to the upside. Very low probability of success. It's actually, would that be an X1S A1? This is an X2. We never got our X. That would be. I'd have to, I'm getting drawn a blank. I think we're right. I may change it here in a second. So this is going to be our X3S. Well, if we're going to reverse it and call this an X1S A1, that's our A1 to the upside. That means this is A1S. That means this has got to be a B1S, doesn't it? Is that B1S? I don't think that's B1S. This is A1 right here, B1. No, that's drive 3. So this is going to be B1 right here. I think we may adjust this. Let's go further down the line. So this is going to be X2S A1S A1. X2S A1. We're trying to map out the probabilities. That's what we're doing here. It's like, Lan, what are you spending the time doing this for? It's 3 drives. We know that. I know, but I want to map out the probabilities. C1S. Is this a C1? It is C1S. Okay. If that's C1, so that's A1, A, B, C. So drive 1, drive 2, drive 3. So that down here, where the bottom of the C1 drive, if it breaks that, that would be a D drive. That would be a D1S, which is really rare. All right. They're like unicorns. We don't see them very often. Although, some of us see them more often than others, not judging. Okay, so that's a D1S. If it breaks and continues down, that would be our fourth drive down. So sometimes it might be easier to start from this end, drive 1, drive 2, drive 3. That makes that a D1. And then you could go backwards and see where your probabilities are. But you want to be able to do it on the fly, right? The whole idea is to do this as the market moves through price and time so you can know what your probabilities are. So if that's our probabilities, that means that this one right here, this is a high probability. This is going to be an X3S/A1. S meaning short. We don't tag L for long. We just assume long. And so that's an X3S/A1. Now, Michael Bruce, I know you commented the other day and said you're getting this down. You're able to do these probability statements. Are you still with me on this one? Are you keeping up? All right, so that's D1, X3SA1. That is a high probability of a turnaround point. Now, it doesn't mean that soybeans can't continue to fall. In fact, if we come and look at them, it says that between March 5th and March 27th, 81% of the time, soybeans have been bearish. So March 5th to March 27th. So we may get a D1 in here. So we may get a D1. March 5th. So we got a starting point right here. Where's March 5th? What that's telling us is that in the past, there's draw that line in the sand right there on March 5th, the close of March 5th. Actually, it's the open of March 5th. The opening of March 5th. So there's our line in the sand. And it says 81% of the time, by March 27th, that thing's been below that red line by 46%, or roughly on average $1,000. We can do it either way. So we can come over here and let's just draw $1,000 down on this one. So from here to here, saying on average, that's not very much for this market right there. Roughly there. So saying you're going to, what's the date? March 27th. Where's March 27th? Right there. Okay, so by that date, so there's our box. Not a very big box. That's an average, though. So, well, that would kind of correspond with what's going on, wouldn't it? Technically speaking. There you go. There's your box for that seasonal move. Not a very big box, but what it's telling us, seasonally speaking, 81% of the time, it's been below that red line. It's been down here. It hasn't turned and rallied. It's stayed down here below this red line somewhere. And on average, it's been that line right there. Doesn't mean it can't go lower. Doesn't mean it can't come up here and then turn around and come back down. It can. It's just 81% of the time over the last 16 years that thing's not rallied this time of year. So if we wanted to put an order on there, take a short position, hold a short position, we could do it in several ways. Let's go see if there's any options. There should be options here. And we don't need a lot of time because we only have, how many days does that thing say? 23 calendar days. So we need more than 16 days. Let's take 51 days. Let's see how many. So a $1,400 put option. So let's come in here and we'll go options and we're going to buy a put. And we're just going to put it right at the money. $1,400. We'll put it right at the money. We should have done this yesterday. It's already dropped a little bit from yesterday. Okay, 1,600. We don't want 1,600. I'll go down here. It's not in the money. 1,400. All right, we'll just do that one. Okay, we got ourselves a put option for this option strategy. And that's a D1S. That is a low probability. Now, if we were, I don't know if I'd really do, I'm not sure if I want to go do this with real money, because even though the season will say this thing should fall, which really good information for us to know, we're doing it at a D1, which is a really low probability of success. I really wish we were at a C1 to be doing this. Coming in here, or a B1 would even be better to get that probability statement. But there it is. It is what it is. It is what it is. Okay. I can't make it better. It is what it is. Now you have to just decide if it's something you want to do. So that's a $1,400 investment on an option. How much would it cost to take a contract? If we were to come in here and trade it with a contract, we would go into the key, and you can see that the day margin is 1,200, but to hold it overnight, your initial margin is only 2,500. So it goes from 12 to 25. So that's not a bad investment, right? I mean, it's not like 15 grand. So to hold soybeans overnight, all you have to have in your account is $2,500 for one contract of soybeans. So you don't have to put your option out there at 1,400. You could just put your contract out there, put the stop up there. And if you get stopped out, you wait for it to come back below the red line and put it back in again. If it goes back above, you get stopped out, wait for it to go below the red line and put it back in again. You could play it like that with the contract. Each day, just waiting for it to continue to fall down. But if it goes up, wants to go up, just get out. Don't let it go above that red line. If it's what a lot of guys will do, and this, I've done this before. I don't do it as much as some of the other guys. Guys like David Duty will come in here, and what he likes to do is he says, hey, look, this thing has lots of drawdowns. I know it has, oftentimes will have a drawdown, which means it'll go above the red line. So the probabilities are 80% that it's going to stay below that red line. So if it pops up in here, it gives him an opportunity to buy it at a better price, or short it in this case. So he would short it as it turned and made a first candle to break a new low. He would short it up in here, and then he can write it down. He's going to make a lot more than the percentage that says over here in the software. This would be 46% if you got in at the red line. If you get in on the drawdown, so the drawdown brings it up, and then you get in up here, and it falls to the average. It's a lot higher. So, a little bit more sophisticated strategy, but you do you. You decide how you feel comfortable doing it. Experience is going to help you with that too. The more you do these, then the more you're going to get experience at it. But if you just think logically about it, you know that they've got drawdowns. So that's what these little, candlesticks tell you, what the drawdowns are, how low the drawdowns. Now this one had last year at 23 had almost no drawdown. It just kind of went up or down in this case. This is positive to the downside. So this is not directional. This is how much money you made last year. In 2023, it made good money. What's another one? The next green one down is soybean oil. So we could go look at soybean oil. Oh, wait a second. Lan. That was soybean oil. And you are looking at soybeans. Bad Lan. Okay. Well, let's go look at soybean oil then. Not that one, this one, Lan. Soybean oil. Bean oil. Soy meal, soybean oil. And that one's expiring, so we don't want that one. What do you mean it's expiring? Well, look at this. See this big yellow line? That says, get out. Don't own any market that's got the big yellow line. Get out. This one means expiring. That means that they're going to deliver some soybean oil to you if you own it. Or if you sold it and went short, you're going to have to deliver some soybean oil. Remember, this is a physical market. So this is a physical market, and they're going to actually make or take delivery of these items. So somebody's going to drink this soybean oil. They're going to cook with it, right? Make some hamburgers with it. They're going to make some French fries with it. So they got to deliver it. And if they deliver it, then you can't trade it anymore. So this contract comes to an end. This is the March contract. I mean, they're going to deliver the soybean oil to McDonald's, and they're going to cook with it, right? And so there's no more soybean oil in March to trade. So now you have to go to the next soybean oil month. Okay, so we're going to go out to soybean oil May. And it was the one we were looking at in the soybeans. So we'll do the same thing. Get rid of that ATR. We don't need that. All right. So now, look at this. 4 drive pattern down. Drive 1, drive 2, drive 3, drive 4. We're already way down. And it's telling us it wants to go down farther. Soybean oil. The next soybean oil, when we did soybeans off that one, that starts today. So from today, we could draw a line in the sand. I don't like this one. It's at the bottom of a fourth drive and it says it's going to go down. I don't really like that. I'd wait for it to give a drawdown. So if it can go up and break that, it comes down. If it looks like it's going to come down, and I might take a short position in anticipation of one. I might what we get in there. Note each one of these Wyckoff spring. This is one, drive 1, drive 2, drive 3. This is 1. This is 4, 5. So these are both Wyckoff spring here. Some of the third drive, that last drive is a Wyckoff spring. Sometimes that becomes the Wyckoff spring because it'll break the third drive and then go back up. So Wyckoff spring, what are you talking about, Land? What's a Wyckoff spring? Well, it's kind of a head and shoulders bottom formation. I mean, the olden days world, in the olden days, we called them Wyckoff springs. In the modern day world, we call them head and shoulders. So it's that thing right there. It's that little pattern, that reversal pattern. But as soon as that right shoulder is lower than the head, well, it's no longer a right shoulder because shoulders are not higher than heads, right? You'd look kind of goofy if your right shoulder was higher than your head. So that means you have to come down here and move this whole thing down, right? And readjust and reassess. So then this becomes your left shoulder. This becomes your neckline. This becomes your head. This becomes your neckline, which hasn't stepped yet. We'd want it somewhere around there. And then this would be your right shoulder. Get rid of all this stuff here, confusing people. All right. And then you want that neckline to be kind of a natural trend line across the top of these drive patterns like that. Right. So that becomes what we call the head as we look for the reversal at the bottom of the third drive. Now we're already at the fourth drive. So we're looking for this thing to rally, break those blue lights, come down, create a right shoulder, not break the head, and turn and rally at that point. So I don't really like being sure right here because the technicals are telling us that this thing ain't going to go down anymore. But the fundamentals of the seasonal nature of markets tells us that this thing is going to go down. So it's got a very seasonal to it. So I don't want to trade this market at all because I've got one tool telling me that this is going to go down, and I got another tool telling me this market's going to go up. And they don't correspond. They don't align. So what are you going to do? Don't do anything. You don't trade it. You go find something else. Go find a better opportunity. All right. You kind of want those things all to match up. You want your technical analysis to confirm the seasonal. Now, if you really trade soybean oil because you're a soybean oil farmer, what are you going to do? Well, you have to make a decision. You got soybeans in the field, so you're long soybeans in the field, and you're going to crush them into soybean oil, and you want to hedge them, or you want to trade them over here, protect your position, or you want to kind of capitalize on this move. What are you going to do? I would take the technicals at this point over the fundamentals. So I would look at the three drive pattern, take the probabilities from our book, and look at the probabilities of what this market's going to do before I would take the seasonals. Because the seasonals are only what the market's done in the past. It's not what they've done currently in the present. So what the market is currently doing today is more important than what it's done in the past. You want those two things to line up and correspond with each other. And if they don't, for us as speculators, we're not going to trade it. We're going to go find something that does line up. But for those of you who are farmers and factory owners and you need to be in this market, then you're going to have to, I would recommend you take the technical side over the seasonal nature of the market. Past performance is not necessarily indicative of future results, right? It's the best information that we have, but it's got to correspond with our technical analysis too. It's got to correspond with our setups and our triggers. Remember, we have 5 steps to our trading strategy. Follow through. Count, measure, setup, trigger, follow through. We count the waves. Drive 1, drive 2, drive 3, right? That's the Elliott wave. What do we measure? We measure the waves. Measure the pullbacks and the projections. How far did it pull back? How far do we think it's going to go? That's Fibonacci. We use the Fibonacci ruler for that. Count and measure. Setup. What's the setup? It's whatever the market does to give us a trigger. So maybe it might be some sort of recurring pattern, like a head and shoulders formation, or a little triangle, or a wedge pattern, or a breaking of a new high, or a breaking of an indicator like the blue lights or the ATR. Maybe we confirmed by the indicators such as the MACD or the stochastic. That's your setup. And then the trigger is what makes you decide it's time to pull the trigger and get into the market. If we counted, we've measured, we've got a setup, and we have a projection of where we think the market's going to go based on the previous analysis, we now get a trigger. What's going to trigger us to get into the market, and what's going to get us out of the market? So what makes us get in? Well, when it breaks the pattern, when it breaks the trend line, when it confirms the upside or the side of the breakout pattern, or the trend line, or the line that's specified by trade miners, that's your setup and your trigger. So once that's triggered, you have a trigger. And then what is the exit? The follow through. How are you going to get out? Scalp and trail. You can take a little short scalp off after the market hits a certain target level, and then you can trail to an area of resistance or a Fibonacci number where you might want to take your profits, or you can just simply trail to exit based on a mathematical model such as the blue light or the ATR, or price bars back, or areas of support and resistance. There's a lot of ways to do the follow through, how you get out of the market. So count, measure, setup, trigger, and follow through. All right, guys. We've run out of time. I can let you guys go through and pull up your trade miner and work on that and do some more trade miner stuff and find yourself some opportunities to trade in the futures market for a little bit longer. Trading has to be day trading. Not everything has to be day trading. There's a lot more people don't day trade the futures market than do. So keep that in mind. All right. And this is just a great way to kind of help you point out some of these markets that you can go look at, and a lot of fun. So we got oils again. Soybean oil is pretty active in here. There's heating oil. We could have gone and looked at heating oil. We could look at coffee. We could look at platinum. NASDAQ's got a little bit of nature. 14th. Bullish, bearish. Oh, that's soybeans again. So NASDAQ has some high scores for being bullish around mid-March. How many of you got Pit News Magazine and read the article? Do we have Pit News Magazine here? We do. So for you guys, I'm going to bring that one down. How many of you got Pit News Magazine? I wanted to ask. I never asked you yesterday. Did you guys see that article in Pit News Magazine? This is Pit News Magazine, this issue. And wasn't this a good issue? Did you guys enjoy it? I wanted to ask if you guys liked that article on Kramer. Unmasking Hedge Fund Secrets Part 2, the news and option. How many of you watched that video and your jaw just dropped and hit the floor? You were like, are you kidding? Did he really say what he just said? I cannot believe he just said what he just said. Kirk says he loves it. Did you listen to that? Did you listen to that that video, Kirk? Did you listen to that video on Jim Cramer? Oh my gosh. You guys who don't have Pit News Magazine, you got to go get it. All right, go get it. Where's my cheat sheet on that? Go get Pit News Magazine. Go over to pitnews.com. Subscribe today. It's 1 full year for $49. You get the first 3 months free just to try it and see if you like it. If you don't like it, cancel. No hard feelings. You can cancel it. Get 3 issues for $1. And if you don't think it's the neatest thing in trading that you've ever seen, the most valuable thing you've ever seen, cancel it. But I can tell you, it is. It's $50 for a whole year of this stuff. And each article, you can listen to it, has audio, so you don't even have to read it, but yet it's got all the information available to you. You can read the articles, and there's videos in it, so you can watch it. Okay. So Pit News Magazine, you got to go get it. It's over there at pitnews.com. But let's go back to the magazine. That article, I really liked that article. W.C. Randy said he really liked it. So Kirk says he's heard of that before, but yeah, so it's in the magazine if you guys haven't seen it. W.C. Randy said he really liked that article. That was a good article. So go watch that one. And then this one, of course, we talked to Tom. Didn't want his real name to be used, but we talked about him. He was a former hedge fund manager and turned retail trader, and he tells you some of the tricks that he did. So these are some of the articles. You can see right in here in the article, you have both the video right here, and then you have the article, so you can read the article, and then you also have this audio right here, so you can watch or you can listen to it while you're driving in the car or something. So it's really, really super cool. And this was Aidan Gray's article. How many of you liked Aidan Gray's article? That's pretty good. Stay focused on what you're doing. You see me, getting distracted all the time because I'm talking all the time and I'm not trading. So we miss opportunities, but that's what that article's all about. And he's actually dating Claire now. Can you believe that? Those two didn't know each other until they both started writing for Pit News Magazine, and now they are dating. That's the drama we have going on here in Pit News Magazine. 2 of our writers are dating now. wait till they break up and then you'll see what they say. But she's a cute little thing. All right, so this is the other article. I'll just slide down through Pit News Magazine real quick. You guys can see what you're missing. It's got lots of stuff. Oh, we did a whole series on all the pillars and pyramids. We've been talking about pillars and pyramids here in class. We've done a lot of that. So that's in Pit News Magazine. We wrote that all down so you can listen to the recording. And then, of course, we got all the steps of all the different pyramids and how you execute them. And then, of course, we go into detail on the pillars, because the pillars are actually the way I like to trade the best. So went deep into pillars and how pillars are done. We've even got a video with that one. And then more pillar stuff. And then, of course, this is all about the scalp and trail strategy with the pillars, how to castle, all that stuff. There's my book, Help the Taxman Come with the Tax Considerations. But what is the article I was trying to talk to you about? The reason I was in here, I wanted you to talk about that seasonal article. This one here. This is really good. This is about the Ides of March seasonal strategy for what we're supposed to be doing in the month of March and what to anticipate. So Michael Bruce said he loved the article from the Desert Pump. That was good. We talked about that here in class, and then Claire wrote that up for us. So glad you liked it, Michael Bruce. I'll let her know. She will appreciate it. She actually knows who you are. I've told her about you. So I'll tell her that you enjoyed her article. And I've mentioned her to you before, to her to you. I've mentioned you to her before, but you got to watch this one. This seasonal change of Ides of March. That's by Trade Miner. That turned out really super good. So you want to watch that. And of course, there's a video that goes along with it, and then there's the trade recommendations that are in here too. Of course, you got to have the fun. Got to have the word mirrors. Oh, I'm not going to show you the cartoon. You have to have the issue to see the cartoon. All right, guys. And what about the did you like them? Did you like the poem? Did you like the poem? That's an awesome poem, isn't it? Gideon P. Thornfield. That thing turned out really good. It was awesome. All right, so there it is. There's the magazine. For those of you who don't have it, go get it. And then you'll have the next month. We're working on the next month already. It's got some really good articles in there already. So already working on it, and it's really turning out nice already for the early stages, and really happy. And that's the articles that are in there this month. Go get it. And $1 for 3 months. You guys can join us at Pit News Magazine. All right, guys, that's it. I got nothing else for you today. I'm going to let you go. Go ahead and do all that YouTube stuff. Like, share, subscribe. Give me a thumbs up if you thought today was worthwhile. And we will catch you guys tomorrow. Same time, same channel. See you then.